equities are wildly overvalued by any measure that you want to use. And insiders, corporate insiders, are selling at a record pace right now. They who see what's happening within their own companies are dumping their shares at a rate that's almost never been seen before.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. All of our specials this week are IRA eligible. And if you'd like to learn more about a precious metals IRA, call us, and we'll be happy to help you in that process. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance, and back with us today is our good friend John Rubino from rubino.substack.com. John, thank you so much for joining us today.
Hey Elijah, good to talk to you again. It's been kind of an eventful month since you and I talked last, huh?
Well, it has been an eventful, I guess, month and a half or so with the election of Trump. We're seeing at first the stock market was rallying amid his election, and we saw gold and silver sell off. And now in the last couple of days, it seems like maybe surrounding the Fed's decision here and Powell speaking, the stock market is down significantly. Metals have taken another hit. Your perspective on where we are here?
Well, there had to be a relief rally after the election. And I don't think it was financially related. I think it was more, oh, great, we're not going to have World War III after all, that kind of relief rally, because, Trump and his guys are at least giving lip service to ending the Ukraine war, which is where humanity is really at stake. We're fighting a proxy war against the world's other major nuclear power. And that means any kind of miscalculation is an existential threat. So take that away, and it's no surprise that a lot of people bought stocks because they were feeling more optimistic. But then, relief rallies never last very long because you always have to come back to reality. And where we are now, financially and in terms of equities valuations, if we're going to stay with the stock market, equities are wildly overvalued by any measure that you want to use, and corporate insiders, are selling at a record pace right now. They who see what's happening within their own companies are dumping their shares at a rate that's almost never been seen before. So that's a very big signal. And there are other related signals. Warren Buffett is raising cash pretty aggressively. He's got more cash on hand than he's ever had before, and he's been selling stocks in order to raise that cash, of course. And there are lots of other things out there that point towards an end to this stock bubble. And I think the biggest one is that the Fed is now talking tough. They did cut interest rates just lately, but it was along with a lot of hawkish rhetoric. In the sense that they're talking about maybe not so many increases in the year ahead as before. And that makes a lot of sense considering that retail sales just came in stronger than expected, and inflation by most measures is above the Fed's target, and some of those measures are trending up and not down right now. Interest rates jumped in the last couple of weeks, and the 10-year Treasury yield in the U.S. is now back to 4.5%, up from like 3.6% during the relief rally. And then equities, of course, are wildly overvalued. Home prices are at record highs. Bitcoin just broke 100,000. And, you add all that up, and this is the kind of environment where a central bank would normally be tightening aggressively. And the fact that our central bank just cut and then promised cuts in the future, just not as many, means that our central bank in particular is going to have a ways to go before they confront reality and actually have to start tightening. And if interest rates stay this high while they're confronting that reality, that makes stocks unattractive. The yield on the S&P 500 is about 1.8% right now. And with today's interest rates, you can get a bank CD that'll pay you 4.5%, maybe more in some cases. So if you're a nervous investor, what are you going to do? Obviously, a lot of people are going to take the bird in hand that is 3 times as high as the bird in the tree, and they'll sell stocks and put that money into medium to short term fixed income. And that's how a lot of bear markets get started, where valuation just gets to the point where the yield on stocks isn't attractive anymore. And people make the logical shift and, leaving everything else out, all the crises that could happen out there and all the ambiguity in the world. Stocks are due for a big correction just because of the imbalance between stock yields and short-term interest rates.
No, when it comes to, you mentioned Warren Buffett has his largest cash position ever. Also, you were commenting on a post from Marin Katusa where he mentions that professional traders have pushed their bullish positions in the S&P futures to unprecedented levels. So it seems like the mainstream is piling into the stock market while these insiders are, taking positions off, having their largest cash positions ever for Buffett. So it's like, that seems to be a huge red flag.
Yeah, that's something I forgot to mention. I'm glad you pointed out that retail investors are still buying stocks and hedge funds are way long right now. And those are 2 groups of people that qualify as dumb money at major turning points. So yeah, you got the wrong people piling into stocks, and the right people getting out of stocks if you assume equities are overvalued and they're going to go down. So yeah, that's a setup for a correction at a minimum and maybe a serious bear market. And given where valuations are right now, history says that a serious bear market is the thing that comes. See, then at that point, with the next bear market, it causes the next recession. Things get really interesting because it's completely possible that we've taken on so much debt in the last 40 years, and especially in the last 5 or 8 years, 5 to 8 years, depending on where you want to start this debt binge that we've been on. We're incredibly financially fragile, and it's completely possible that the fractional reserve banking, fiat currency regime that we instituted in 1971 is going to be called into disrepute. In other words, the experiment might end with the next big recession, equities bear market, and then resulting government bailouts. Because if this government in the U.S. that's already wildly over indebted has to throw another $10 trillion at the banking system to bail it out, which it easily might in the next bear market, then it's completely possible that people look at those numbers and say, okay, debt is rising parabolically. Interest rates or interest costs for the U.S. government are going straight up. And now they're going to just create out of thin air $10 more trillion to bail the banks out. Do we want to be in this currency? And so I think that's where the story gets really interesting. We clearly have a garden variety bear market coming just because of valuations and those other things we just talked about. But if that metastasizes into another great recession, another 2008, 2009, where lots of big entities are going to go bankrupt unless the governments of the world step in, it's possible that that's our last shot at that particular brass ring. We just can't keep going back to that well and keep doing that over and over again. And maybe people give up on this system. And so I think that's the thing we've been talking about for such a long time, the crack up boom leading to the monetary reset. I think there's a decent chance that we're staring at that over the next few years. And if so, it's financial history we get to live through, and terrifying for most people, and potentially really lucrative for the people who are positioned for it.
It makes me maybe step back here, and we're seeing, the election of Trump, and then also Biden it seems like the Biden administration doing everything they can to escalate geopolitical wars across the globe. We're seeing this, it's maybe the start of a crash in the stock market, another financial crisis, and maybe another curveball here. We're seeing also California declare a state of emergency over the bird flu. I don't know. It seems like there are so many different crises going on just before Trump is inaugurated. I don't know if you think that is connected in any way, but what do you think people should be expecting in the next couple months?
Well, I think the entrenched aristocracy, or the deep state, or the oligarchy, whatever you want to call it, or the uniparty, whatever you want to call the guys who have been in charge for the last 40 years and want to stay in charge, they're clearly willing to do basically anything. I mean, this is, the guys who are in charge now are in the same lineage that as the ones who assassinated JFK. Okay, so you can go all the way back to them and find people in charge who are willing to do basically anything. So yes, ramping up a potential nuclear war with Russia, crazy as that sounds, is something they're actually doing now. They think of it as a negotiating tactic. You aggressively escalate the fighting in order to give yourself the best position for cutting a deal. But we're aggressively escalating the fighting with right on the border and inland with the world's other nuclear superpower. Is that worth another move on the chessboard? See, these guys are playing games. They don't actually seem to understand that they and their are going to be incinerated in a nuclear war if they get this wrong. And, in the financial sphere, it's basically the same thing. We're running massive deficits now. The first 2 months of the U.S. fiscal year was by far the highest deficit for that period of time that the U.S. government has ever run. And remember, we're 15 years into an expansion. We've got equities at all-time highs, which means, we're generating lots of capital gains that the government can tax. Unemployment is near a record low. We've got more people working right now than ever before, which means lots of payroll taxes are flowing into the government. And yet we're running the biggest deficit of all time. We're on track for $3 to $4 trillion deficit if you just extrapolate the first 2 months of fiscal 2025 out, and that is also basically a scam designed to make things harder for the incoming administration. So yeah, these guys are not going to give up easily. And and was it the bird flu that they just declared an state of emergency over in California?
What in the world? Another pandemic?
Yeah, well, it's pandemic version 2.0 coming, and that's completely within the range of possibility too. If California does it, it's a big chunk of the U.S. right there. And so it can't happen too soon for Kennedy to come in and clear out the people who are potentially running dirty tricks in the guise of national health care. But, there's no guarantee that any of this is allowed to happen because there are all kinds of potential false flags that can happen between now and Inauguration Day. And, one of them could be some kind of terrorist attack. Another one could be some kind of geopolitical thing where some war somewhere ramps up dramatically. And there could be financial crises. There could be a gigantic derivatives bust or something like that, engineered by people who don't want Trump to be able to cut the size of the government. So a lot of stuff could happen. And I'm not predicting any one of them, but we're already seeing stuff like that. I mean, ramping up the Ukraine war on the way out the door doesn't make any sense for a president, or declaring a state of emergency in America's biggest state over something that has infected, 27 people or some crazy low number like that, like something that is beneath the notice of a governor in a state normally. But they're back at it again, because let's just say it. They loved having the power that was conferred on them by the pandemic. And they miss it. So they want to get back to something like that. So it's not a surprise that they're trying something like that. And we just have to hope that January comes soon enough without a major event that allows a lot of the incentive for these things to go away. But in the meantime, this kind of thing adds to the volatility in the financial markets and really increases what should be a risk-off perspective for a lot of people. I mean, we should be nervous with stocks at this level. We should be looking for ways to hedge against the bear market that almost always comes when equities are this overvalued. And to the extent that people are watching things going on out there in the world, this should reinforce that attitude, but it's not. At least not so far, As we're speaking today, equities are way up again. They're bouncing back from the hard day they had a couple of days ago. So, who knows what everybody's thinking out there, but I know what they should be thinking. They should be really worried, and hopefully that kind of an attitude becomes conventional wisdom pretty soon, and people will pull back from all the risk taking that they're involved in now.
It might be a wake-up call, maybe to our viewers and maybe myself as well, where I'm thinking, Trump's in, things are going to be maybe a lot better than they would, and that's probably still true. They're going to be better than they would have been. But if you look at the first Trump administration, he was handcuffed a lot, with the Russian collusion hoax and everything like that. The elite have a lot of tricks up their sleeves that they can play, and I guess just another reason to think, just because we have someone in office that might be good for certain things, it doesn't mean the general trajectory that we've been talking about for over a decade now has changed. And as you mentioned, the national debt, right? The 2 months start to the fiscal year is the worst start to the fiscal year we've ever seen. So the trajectory is still towards, it seems like, hyperinflation of the US dollar. Your perspective on, I guess, how it seems like we're at the end of this monetary cycle.
Yeah, the monetary crisis that leads to the currency reset, they're baked in the cake. We've taken on more debt than any country can possibly handle, and that's got to play out. That's got to have the inevitable consequences. So even if you're a Trump fan and you're looking forward to having him come in and clean the swamp out and everything, and I would count myself kind of in that category. I like what I've seen from Trump lately. I'm also worried that he's an erratic guy, and I don't want to be responsible for every single thing he does. But I like the team he's building and stuff like that. I think a lot of good can come from this change in leadership and the new people that are coming in. But that doesn't mean that we fix the finances easily or at all. I can't imagine how any country can fix debt at 120% of GDP with interest costs going straight up and all the other things, all the other overvalued assets that are out there right now. You got to have a financial crisis just because of overvaluation in the housing market and in equities. And that is going to make government deficits go up from here, which we can't afford to have them do that. And then you got the structural deficit of baby boomers retiring. My generation is heading off into the sunset now and collecting Social Security and Medicare, which means government spending has to go up regardless. There's no way to actually cut government spending. I mean, even limiting it to an unacceptable growth rate is probably impossible just because of demographics. So all of that stuff means financial crisis is out there coming somewhere. A big equities thing leading to a bond thing, leading to inflation and bailouts and a currency reset. That's all out there. It has to happen. And there's no way around it. But there are, one kind of government can ride it out and make the best of a bad situation. But another kind of government can just spin out of control and become authoritarian in a heartbeat in a situation like that. So here is hoping that Trump and his people are relatively wise in the face of the crisis that's coming, and they manage it, because you can have the market impose a currency reset on you in the form of a gigantic financial crisis, which just, forces a lot of debt to go bankrupt and banks everywhere and other financial entities to go bankrupt. Or you can have a government see it coming and switch to a new monetary system, do the monetary reset in anticipation of a big giant crisis and see what happens, And I hope that our guys do something like that in the next 5 or so years. An analogy is Hitler and Napoleon, who came to power after big financial crises in their countries, and FDR, who came into power during a financial crisis in the U.S. in the Great Depression. Now, he did a lot of things that especially gold bugs don't like, but he managed his way through the Depression and World War II. And then, we went back to being a democracy where you have elections every couple of years and new people come in. He stayed in power for longer than you would normally expect a president to do. But other than that, he got us through this thing and we came out as the America that we recognize. So hopefully Trump and his people adopt the FDR model instead of the Hitler or Napoleon model where, everything just falls apart and we're desperate for a strong leader and somebody ends up being a de facto dictator in order to fix things that seem unfixable. So that this is a scary time for the U.S. because there are a lot of historical analogies that are terrifying for what's coming. And, we got to hope that the people we have in charge are wise enough to get us through this so we can go back to some variation of normal 5 or 10 years from now.
It would seem like, at least on a financial level, there's kind of two ways of dealing with a crisis like this. I mean, the easiest way is just kind of continuing to inflate, right? You just inflate the financial system because that pushes the pain down the road. Or you could maybe go back to a gold standard or do something like that where you might have a crash right away and you would have a slower growth over time, and you'd feel the pain right away. What approach do you think the Trump administration might do in the face of a crisis like that? And do you not think they're just going to kind of push the pain down the road farther?
Well, the unwise way to address something like this is just to let it metastasize until the crisis is so horrendous that basically people are willing to accept anything from the government in return for the bleeding stopping, and that's historically, that's how it goes most of the time. But what we totally could do is see it coming and just announce a new monetary system. And it would probably be a gold standard at this point in our history because that's the thing we understand. Humanity has basically been on a gold standard on and off for several hundred years. And if you want to just go back to when gold was just money and that was all there is to it, 3,000 years. So it's possible that we do something like that, where we just say, look, this clearly isn't working and we need to do something else. So let's sit down and let's figure out how to go back to something like the classical gold standard when things basically work. Now, that doesn't mean that's a pain-free transition because all the people who have cash and government bonds end up seeing their savings be diminished because you can't go back to a gold standard from here without a big devaluation of the dollar and the euro and the yen. This is probably going to be a worldwide thing when it happens. And so the people that trust the government are hurt badly by this. And probably they take to the streets. Probably there's civil unrest. Probably there's a lot of political turmoil. So it's not an easy thing to get through. But it is something that we could get through without having a dictatorship. We just, we just accept the pain. We do what we can to moderate it. And 3 or 4 or 5 years in, we've got a stable currency. We've got a monetary system that looks like it can exist and grow organically over time. And then we're back on a sustainable path. But it won't be painless. It'll just be less painful in the long run than the alternatives. And that when you screw up on the scale that we've screwed up, minimizing the pain rather than eliminating it is all you can hope for.
And for those then listening, I mean, it's interesting because obviously there's a solution on a national scale that the U.S. could implement, maybe a gold standard or something like that. But as Gregory Mannarino has constantly recommended to us, become your own central bank. you can also take control and minimize the pain going forward just by becoming your own central bank, investing in something real. Can you talk a little bit about this, the actions that our viewers can start to take to prepare for this crisis?
Yeah, there's all kinds of stuff we can do to prepare for this. And it falls under the category of basically prepping, do what the preppers have been doing for all these years. And on the financial side of that means shift your capital out of financial assets that depend for their value on the value of the dollar, because the dollar's got to be devalued massively at some point. And you shift into real assets, that is energy assets like oil company stocks, gold and silver in physical form and in the derivative forms like gold mining stocks, farmland. Bill Gates is now the biggest private owner of farmland in the world. And he's doing that because his financial advisors are saying, well, they're telling him two things. One, they're saying, okay, real assets do well in times of financial turmoil when currencies are being devalued. And the other is that, well, if you own enough farmland, you can monopolize the food system and raise prices and yield or reap some more monopoly profits later in your life, as you've done all through your life so far. So those two things lead to the logical conclusion that you want to own real assets like farmland. So there's lots you can do on the financial side. And, most people obviously start with something like silver coins, which they're easy to buy. They're not super expensive. And that is a good place to start. And then you want to own some gold. And a lot of smart people would say Bitcoin too, but I'm just don't understand cryptos well enough to make an affirmative recommendation about them one way or the other. But if you're crypto curious, there are lots of smart people who you can talk to about how you might add cryptos to a prepping portfolio. But, personally, I'm mostly in precious metals with some real estate and with some energy stocks. Oh, and uranium stocks too. So uranium qualifies as first of all, an energy asset and one with a great story. In other words, we don't have enough uranium to do the things we need nuclear power to do going forward. So the uranium miners are excellent investments. There's a lot you can do. And in my Substack, basically, a lot of the actionable advice is geared in that direction. What can you do to prepare and make yourself resilient going forward? And since there are lots of things you can do, it's a thesis that keeps you very busy with stuff like making a garden and then buying gold and silver and figuring out where to put it and on and on and on. So it's kind of a never-ending lifestyle choice once you make it, and it's interesting and potentially really profitable.
And if our viewers are interested in learning more, they can go to rubino.substack.com. You'll see it first linked in the description there. We really appreciate your time, John. I was just looking over some of the articles you send out via email, and a Bitcoin crash course by another contributor is actually one of them. So even though you said you might not know enough yourself about Bitcoin, you're also sharing other people's work that's very helpful there as well. Obviously, nothing financial advice on this channel, but or with you, but it's really insights for people to make those decisions themselves. So we really appreciate your time today. Any last thoughts before we let you go, John?
Just that this is an incredibly complicated time, and there's good things happening out there, and there are horrendous things happening out there. And I think for our own psychological health, we have to figure out a way to distance ourselves a little bit from this, because you can go down rabbit hole after rabbit hole out there right now. And like any other obsession, it becomes very self-destructive, and if you go too far with it. And so, my advice right now is to disconnect a little bit. Take a few days off from all of this stuff and just turn off the computer, go out and wander around barefoot in the grass if you can, or go to some pretty place, or just hang out with friends who aren't focused on this stuff. And, the crises and the conspiracies will still be there when you come back, probably more so than today. So yeah, anyhow, balance is important in everything, and definitely in our lives in really contentious times.
Fantastic. John, once again, thank you so much for your time today, and Merry Christmas.
Thanks, Elijah. Merry Christmas to you too.
This is Kaiser Johnson with Liberty and Finance, and this is the Miles Franklin Weekly Special for December 16th through December 23rd, 2024, while supplies last. This week we feature 2024 1-ounce silver eagles at just $4.85 over spot, one of the lowest premiums we've seen in years. We have a limited supply, so these are first come, first serve. Next, 2024 1/10-ounce gold eagles are just $44.99 over melt per coin. We also have an incredible deal on XF $20 gold Liberty coins at just $75 over melt, one of the lowest premiums on pre-33 gold we've seen in a long time. And finally, 1/10-ounce Gold Britannia are just $29.99 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.